Estée Lauder trying to swallow Pug right now is absolute madness. They're in the middle of a messy turnaround.
It's not madness, Nate. It's a defensive necessity. If they merge, they hit 15% market share in premium fragrance. They're terrified of L'Oreal.
You don't do a mega merger just because you're scared of the French.
You do, if you want to survive. Speaking of survival, did you see Apollo dropping $3.7 billion on Japanese glass?
Nippon Sheet Glass. Now that's a private equity pivot I actually want to talk about. The rundown.
$14 billion for Juniper Networks. I read the press release 3 times, Nate. They keep saying AI, 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 but this is a legacy networking deal.
You are so cynical. Look at the data center footprint. HPE needs the networking pipes to handle massive AI workloads. You can't build the AI future on outdated architecture.
Outdated? Juniper was founded in the 90s, yes, but calling this an AI acquisition is classic AI washing. They paid a massive premium for routers and switches to save their own declining server business.
I will defend the strategic logic all day. But fine, let's talk about a real AI deal. Netflix just bought Ben Affleck's startup.
InterPositive, a filmmaker-first AI tool. Because when I think of cutting-edge machine learning, my brain goes straight to the guy from Good Will Hunting.
Oh, come on. Don't disrespect the Affleck pivot. Seriously, though, Netflix acquiring a production AI tool tells you exactly where content budgets are heading. They want to automate the post-production grunt work.
I actually buy that. It's a tiny bolt-on, but it makes sense. Which brings us to Apollo dropping $3.7 billion on Japanese glass.
I love this deal. Everyone is chasing software multiples, and Apollo just buys Nippon Sheet Glass to play the renewable energy transition.
Solar panels need glass, EVs need glass.
Exactly. It's a brilliant infrastructure play dressed up as a boring materials buyout.
I agree on the thesis, but a $3.7 billion carve-out in Japan? The cultural integration is going to be a nightmare for a New York private equity shop.
You always go straight to the integration risks.
Because that's where deals actually die, Nate. Which brings us to the gossip out of Estée Lauder today.
The Pug talks, a potential mega merger to capture 15% of the premium fragrance market. They'd be right behind L'Oreal.
Morningstar is already sounding the alarm. Estée Lauder is in the middle of a massive turnaround. Bolting on a Spanish fragrance giant right now is like trying to remodel your kitchen while the roof is caving in.
But the synergies, think of the margins on luxury perfume.
I'm thinking of the execution risk, which is exactly what we need to unpack. How do you actually merge 2 massive beauty empires without destroying the brand value?
Grab your safety goggles. We are tearing apart the Estée Lauder and Puig potential pitch deck right after this break. The big one. $14 billion. That is a massive check for Hewlett Packard Enterprise to write for Juniper Networks.
And of course, they put the magic letters in the press release. AI. Everything is an artificial intelligence play now. I read the release, Nate. They literally used the word AI 14 times. That is exactly $1 billion per mention.
That is a highly precise valuation metric. I love it. But look, put my old banker hat on for a second. You cannot build AI data centers without serious networking pipes. Juniper gives them that backbone.
Juniper is legacy, Nate. They make enterprise routers. Slapping an AI label on a 28-year-old hardware company does not make it OpenAI. You are paying a future tech premium for a company that peaked during the dot-com boom.
Oh, come on. That is entirely unfair. It is a pure infrastructure play. HPE is looking at Cisco dominating the enterprise network space and realizing they are getting boxed out. If you want to sell AI servers, you need the network fabric to tie the whole rack together.
Sure, the plumbing matters, but $14 billion? The premium here is purely narrative-driven. HPE needs a growth story because their core compute business is stalling. They are buying revenue and painting it with an AI brush.
I will actually push back hard on that. Have you looked at Juniper's Mist AI platform? It is legitimately good tech for automating network management. They are not just bending sheet metal over there.
Mist is fine. I have read the specs. But is it $14 billion fine? If you look at the footnotes on their synergy projections, they are assuming massive cross-selling, selling Juniper routers to HPE server clients. That never works as smoothly as the pitch deck claims. The sales teams are going to fight over commissions for the next 3 years.
You just hate hardware deals?
I hate hardware deals masquerading as software multiples. It is exactly like Netflix buying Ben Affleck's startup.
Wait, what?
InterPositive, Netflix just bought it, supposedly to develop filmmaker-first artificial intelligence tools.
Ben Affleck has an AI startup?
Had an AI startup, now Netflix has it. Everyone is buying the AI label this week to keep the analyst happy.
That is amazing. Good for Batman. But back to HPE. Who actually loses here?
Cisco, potentially. If HPE pulls off the integration, which is a massive if, they can walk into a CIO's office and sell the whole stack. Compute, storage, network.
The classic one throat to choke strategy. Buyers love that.
Exactly. But history is littered with failed tech mega mergers that tried to do exactly this. Compaq, anyone?
Ouch, too soon.
It has been over 20 years, Nate.
Still hurts. Look, the market is forcing these giant bets. You either scale up to handle AI workloads or you become completely irrelevant.
I just want to see the actual revenue from these AI tools, not just the press release buzzwords. Until then, I am staying skeptical.
We will check the earnings in 18 months and see who is right. Speaking of giant bets, tech is not the only sector seeing massive checks this week. Have you looked at what Apollo is doing in Japan?
$3.7 billion for Nippon Sheet Glass. Now that is a private equity structure I actually want to dig into. Voices.
Morningstar is out here throwing absolute cold water on this Estée Lauder and Puig talk. They're saying a merger creates a premium fragrance powerhouse, sure, but the sheer size and timing is a nightmare for integration.
Well, they aren't wrong. Estée Lauder is literally in the middle of a massive turnaround effort. You don't try to swallow a giant Spanish fragrance house when your own house is currently on fire.
I completely disagree. You absolutely do.
Oh, come on.
I'm serious. Look at the gossip wire today. Estée Lauder confirmed the talks. If they pull this off, their premium fragrance market share jumps to 15%. They're suddenly breathing right down L'Oreal's neck. Sometimes a defensive mega merger is exactly what you need to change the narrative.
Changing the narrative is banker speak for ignoring the balance sheet, Nate.
Okay, guilty as charged, but it works.
I read the footnotes on Estée's recent restructuring costs. Integrating Puig into their legacy supply chain right now would be like trying to perform open-heart surgery while running a marathon. It's reckless.
I love a dramatic medical analogy. Speaking of sudden moves, let's talk about Apollo sprinting into Japan. Industry watchers are calling their $3.7 billion buyout of Nippon Sheet Glass a massive private equity pivot.
Into Japanese renewable energy and automotive supply chains. Yeah, that's the consensus take today. But I think the analysts are missing the real mechanics here.
Wait, really? You don't buy the renewables angle?
I buy it, but $3.7 billion isn't just a toe in the water. That is Apollo making their biggest PE splash in Japan. Period. They aren't just buying a glass company. They're buying a foundational platform to roll up the entire regional supply chain.
That's actually smart. Take a boring legacy asset and use it as a battering ram to capture high growth margins. Classic Apollo playbook.
Exactly. Now we just need to see if the local regulators play along.
Which is a perfect segue. We've got some fascinating regulatory shifts happening tomorrow in Southeast Asia that middle market deal makers need to hear about. Spill the tea. I'm smelling a lot of desperation coming out of the Estée Lauder camp.
Desperation mixed with very expensive perfume.
Exactly. They just confirmed they're talking to Puig about a mega merger. If they pull this off, it bumps their premium fragrance market share up to 15%. Suddenly, L'Oreal is actually looking over its shoulder.
Wait, you think this is a good idea?
Strategically, yes, you have to bulk up to fight L'Oreal. It's the only way you win that premium shelf space.
Oh, come on. Have you looked at Estée's internal numbers lately? They're right in the middle of a massive, painful turnaround. Morningstar is already waving giant red flags about the integration risk.
Hey, bankers love a turnaround story.
Bankers love fees, Nate. You know this. Trying to swallow Puig right now is like deciding to remodel your kitchen while your house is actively on fire.
Okay, that's fair. But you have to admit the beauty sector is getting fascinating right now. It's not just the heritage giants trying to buy market share.
You're talking about Perfect Corp.
Yes, they just formed a special committee to evaluate a preliminary going private proposal. Beauty tech is suddenly the most popular kid at the dance.
I actually like that play way more than the Estée rumor. Perfect Corp has real technology, and getting out of the public markets gives them room to breathe. No more quarterly earnings calls trying to explain augmented reality makeup filters to retail analysts.
Completely agree. Public markets have zero patience for complex tech transitions right now, which actually leads perfectly into what Apollo is doing over in Japan.
Right, $3.7 billion for Nippon Sheet Glass. Tomorrow's radar. I'm actually keeping my eye on Manila tomorrow. The Philippines Competition Commission just raised their mandatory M&A reporting thresholds.
Wait, really? We're tracking Southeast Asian antitrust thresholds now?
It's going to unbottle a ton of middle market deal flow in the region. But fine, what's on your radar?
The beauty counter. I want to see if Estée Lauder actually puts a ring on Puig tomorrow. If that mega merger happens, they grab 15% of the premium fragrance market. They'd trail only L'Oreal.
Nate, that's a disaster waiting to happen.
Oh, come on. Grabbing 15% market share in one move is a banker's dream?
And an integration nightmare. Estée is right in the middle of a massive turnaround effort. You don't swallow a giant fragrance house while your own core business is messy. Morningstar is already throwing up warning flags on the sheer size of it.
Fair, but add in beauty tech firm Perfect Corp evaluating a going private proposal today, and cosmetics is suddenly the wildest sector of the week.
We'll see who actually signs on the dotted line tomorrow. Keep reading the footnotes, everyone.